Hey everyone, welcome back to Corporate Decoder, the place where we dissect those confusing corporate filings so you don't have to. Today, we're diving into a recent report from Rimini Street. Let's see if their latest moves are a clever business play or just throwing money at the wall hoping something sticks. This is an 8K filing, which is basically a company shouting, "Hey, look at this important thing that just happened." It was filed because they've just put in place a new long-term incentive plan for their top executives. So, what is this plan? It's called the 2025 Long-Term Incentive Plan, or LTI plan. Basically, it's a way to reward executives with company stock or options to buy stock if they hit certain goals. It involves performance units, restricted stock units, and stock options, all tied to the company's performance. Now let's look at who gets what. The CEO, Seth Ravin, gets a mix of 50% performance units, 30% restricted stock units, and 20% stock options. The other top dogs get 40% performance units, 40% restricted stock units, and 20% stock options. It's all about motivating them to boost the company's value. Let's talk numbers. Ravin is getting awards tied to 344,827 performance units, 206,896 restricted stock units, and 219,605 stock options. The CFO, Michael Perica, gets 114,942 of both performance and restricted stock units, and 91,502 stock options. The other executives also get a sizable chunk. The value of these awards is significant, with Ravin's targeted grant value at $2.4 million and Perica at $1 million. How did they figure out how many units and options to give? For the performance and restricted stock units, they looked at the closing stock price on the grant date, which was about $3.48 per share. The stock options are valued using something called the Black-Scholes model, which is a fancy way to estimate the fair price of an option. There's also a little quirk for the CEO's stock options. Because he already owns a big chunk of the company, his stock options are a little different. They aren't incentive stock options unless the price to buy the stock is really high and they expire faster. So how do these executives actually get their rewards? The performance units vest or become fully owned based on how well the company does over a year. Half of the units depend on adjusted EBITDA, which is earnings before interest, taxes, depreciation, and amortization, adjusted for some other factors. The other half depends on total revenue. If the company hits its targets, the executives get their units, which then vest over 3 years. If the company really knocks it out of the park, they could get up to 200% of the target. The restricted stock units are simpler. They just vest in equal chunks over 3 years as long as the executive stays with the company. The stock options also vest over 3 years. This means the executives can buy shares of the company at a set price after those years. If the stock price goes up, they can make a profit. A major part of the plan hinges on hitting adjusted EBITDA targets. Looking at the most recent earnings report, the company's fiscal year 2024 adjusted EBITDA landed at $69.8 million. A sizable chunk of the executive compensation rides on their ability to maintain or even exceed this level. Finally, there's the usual legal stuff. The exhibit here just includes all of this data in a format that computers can easily read. So, what does all this mean? Rimini Street is betting big that these incentives will push their executives to grow the company and boost profits. The plan seems pretty standard, with a mix of performance-based and time-based rewards. Now, for my take, Rimini Street is clearly trying to incentivize its leadership team to drive growth and profitability. The emphasis on adjusted EBITDA and revenue targets makes sense, as these are key metrics for the company. One potential risk is that executives might focus too much on short-term gains to hit their targets, potentially sacrificing long-term growth or innovation. However, the 3-year vesting schedules for the restricted stock units and stock options should help balance this out. Another thing to consider is the competitive landscape. Rimini Street operates in a pretty cutthroat market, and its success depends on its ability to win customers and maintain its competitive edge. These incentives could help them attract and retain top talent, which is crucial for staying ahead. Overall, the 2025 LTI plan seems like a reasonable way to motivate Rimini Street's executives. It aligns their interests with those of shareholders and encourages them to focus on key performance indicators. Whether it will actually work remains to be seen, but it's a step in the right direction. Thanks for watching. If you found this breakdown helpful, please hit that like button, leave a comment, and subscribe for more corporate decoder videos. Until next time.